Welcome back to Explain the Charts for a critical and timely analysis of one of the market's most watched and most volatile stocks, Tesla, ticker symbol Tesla. Today, July 24th, 2025, the electric vehicle titan finds itself squarely at the epicenter of significant market pressure, grappling with a sharp and immediate downturn that directly follows a deeply disappointing earnings report. News headlines across major financial outlets are unequivocally stark, prominently featuring a second consecutive quarter of declining auto sales, a significant and worrying red flag for any growth-oriented investor, and a candid warning from CEO Elon Musk about a few rough quarters that he anticipates stretching out ahead, dampening short-term outlooks. As we initiate our comprehensive deep dive, let's first establish the foundational context by observing the full daily chart for Tesla, which provides an extensive view of its price action spanning from March 2024 through the close of trading on July 23, 2025. This broader perspective is absolutely essential for understanding the stock's overarching long-term trajectory, meticulously revealing distinct periods of both robust bullish trends and challenging consolidations that preceded the dramatic price movements we are witnessing today. The daily chart unmistakably illustrates the inherent and often unpredictable volatility characteristic of Tesla, a trait frequently attributed not only to its aggressive high-growth aspirations, but also to powerful external factors, such as the CEO's often controversial public statements and broader shifts in overall market sentiment. Notably, current pre-market indications for July 24, 2025, show Tesla opening significantly lower, near the $305 mark, confirming the profound negative impact of the earnings news directly on today's trading. Focusing more acutely on the recent past, specifically from April 2025 onwards, we observed a notably strong and sustained bullish rally that confidently propelled Tesla upwards, demonstrating considerable investor enthusiasm and speculative interest. This impressive upward momentum successfully pushed Tesla from initial support levels below $240, confidently breaching several key resistance points to attain a significant peak nearing $350 in May, before entering a brief period of consolidation and subsequently attempting another push higher. This established trend was clearly characterized by a consistent sequence of higher highs and higher lows, unequivocally suggesting robust underlying demand or significant speculative interest building up in anticipation of the recent earnings report. This rally was largely underpinned by long-term growth narratives surrounding Tesla's innovative pipeline and future market dominance in EVs and autonomous driving. However, the last recorded daily candle, meticulously representing the trading day of July 23, 2025, closed at $332.56, a level that was initially attempting to solidify its position as new support but unfortunately transformed into a critical short-term resistance point with the news. The pivotal earnings report, which was dramatically released after this market close, delivered a decisive blow to investor confidence, completely reversing the recent wave of optimism and triggering an immediate, widespread wave of aggressive selling across the board. This rapid and dramatic shift in price action unequivocally underscores just how swiftly market sentiment can pivot, especially for high-growth, high-expectation stocks like Tesla, where any perceived fundamental weakness is met with immediate and unforgiving repricing by the market. To precisely capture the immediate fallout and the sheer intensity of the market's reaction, let's zoom in further to the granular 15-minute chart, where we can meticulously observe the frantic and aggressive trading activity that unfolded during the late hours of July 23, 2025. The chart vividly displays a sharp and aggressive sell-off that commenced almost instantly after the official market close, as investors rapidly digested the grim details of the earnings report and reacted decisively. Prices, which were comfortably trading around the $334 mark earlier in the day, plummeted with alarming speed, a clear and undeniable sign of deep-seated panic selling taking hold among even seasoned market participants. By 23:47 Universal Time Coordinated, which represents the very last available candle on this intricate and detailed time frame, Tesla had already cascaded down dramatically to $317.80, marking a substantial initial after-hours erosion of value. The accompanying and significant spike in trading volume within these concentrated 15-minute intervals is particularly telling, strongly indicating that large institutional money, not just small retail investors, was actively and quickly exiting their positions. This rapid downward movement, coupled with such exceptionally high volume, serves as a textbook bearish reversal signal, definitively establishing a significant anticipated gap down for today's open on the daily chart, confirming severe negative sentiment. This immediate and powerful price action unequivocally reflects the market's profound disappointment with Tesla's financial performance and its apparent lack of patience for the company's current operational challenges and unpromising near-term outlook. The large gap down at the start of July 24's trading on the daily chart will visually emphasize the severity of this overnight repricing, and intraday traders will be navigating this new landscape. Now, let's strategically pivot back to the macro view on the daily chart to meticulously identify the critical support levels that Tesla will most certainly test following today's implied open, which numerous real-time news reports place unequivocally around the $305 mark. This current projected price point positions Tesla in an extremely precarious situation, as it directly challenges important historical support zones that have previously demonstrated their formidable resilience in holding the price steady. The immediate strong support level for bulls to desperately defend is clearly the $280 to $290 range, a pivotal area that successfully served as a reliable floor during late February and early March 2025, effectively preventing further significant declines. A definitive and sustained breach of this $280 threshold, especially if validated by persistently heavy trading volume, would undoubtedly send a dire signal to bullish investors, potentially paving the way for a much deeper and more painful retracement of prior gains. Should the relentless selling pressure continue its assault and decisively overwhelm this crucial level, the next significant historical support area to closely monitor would be found around the $240 mark, a price point that proved surprisingly resilient in September and October of 2024, marking a previous substantial bottom for the stock's downtrend. For a more extreme bearish scenario, where market sentiment turns overwhelmingly negative and fear dominates the trading floor, we absolutely cannot rule out a complete retest of the long-term $180 to $200 support levels that were last observed back in April 2024, representing a multi-month low. It's absolutely crucial for all traders and investors to keenly observe that the exceptionally high transaction volumes recorded during recent price declines on the daily chart unequivocally confirm strong conviction behind the selling, indicating that large institutional market participants are actively and strategically offloading shares due to escalating fundamental concerns. This grim observation is further corroborated by recent news reports, including The Guardian's article detailing a sharp and unexpected drop in Tesla's second-quarter vehicle deliveries, which significantly reinforces the already pessimistic outlook on the company's core business. Additionally, a confluence of other compounding factors, such as Elon Musk's often controversial political stances, which have reportedly affected brand demand in crucial European and U.S. markets, and the perceived aging of Tesla's current vehicle lineup without fresh, compelling models, are collectively contributing to the intensity and duration of this ongoing sell-off. The inability to hold above these established historical support levels could usher in a new, protracted bearish phase for the stock, challenging its premium valuation. Shifting our immediate focus to the very short-term trading landscape and returning to the granular detail provided by the 15-minute chart, short-term traders are now intensely monitoring the price action specifically around the $305 mark, which is acting as a critically important psychological support at today's implied open, where buyers might step in. Any potential attempt by the stock to stage a rebound from these deeply depressed lows will most likely encounter its first significant overhead resistance at the $317.80 level, which accurately represents yesterday's crucial after-hours low. Beyond that, the previous day's official daily closing price of $332.56 will serve as a much stronger and more formidable resistance point, potentially creating a notable gap on the daily chart that bearish traders will undoubtedly try to defend fiercely, making it a challenging hurdle. The extreme and unprecedented volatility witnessed during the initial news release, vividly evidenced by the massive trading volumes on these specific 15-minute candles, unequivocally demands extreme caution and meticulous risk management for any contemplated intraday trades, as reversals can be swift and painful. The overwhelming bearish sentiment stemming directly from the severe earnings miss and Elon Musk's pessimistic near-term outlook is the undisputed dominant short-term driver, making any sustained upward moves exceptionally challenging to achieve without new, positive information. For more aggressive day traders, a clear break and sustained hold above the $317 level could indeed signal a very temporary relief rally or short covering bounce. But unless accompanied by truly significant follow-through buying volume, it is highly unlikely to evolve into a meaningful or lasting reversal. Conversely, a decisive break and sustained hold below the $305 support, especially if it's accompanied by yet another rapid surge in selling volume, could trigger further cascading sell orders, thereby accelerating the stock's descent towards those lower, untested support zones with alarming speed. This particular scenario would strongly indicate that previous, seemingly solid support levels identified on the daily chart are being systematically invalidated as the market potentially enters a phase of capitulation or widespread forced selling by disheartened investors. Monitoring candlestick patterns like dojis or hammer formations on lower timeframes could also provide early signals of exhaustion in the selling pressure, hinting at potential bounces. Let's now conclude our comprehensive analysis by returning to the daily chart one final time, providing a broader and forward-looking perspective on the multifaceted potential future scenarios for Tesla. To summarize the critical insights gleaned from our detailed chart examination, the most important price levels for all investors and traders to vigilantly monitor are the immediate implied support at $305. The crucial historical support zone spanning from $280 to $290, and the more distant yet significant psychological floor at $240. On the resistance side, key overhead levels that must be decisively overcome are the $317 after-hours low, and the stronger overhead resistance presented by the previous daily close of $332.56. Considering the current array of formidable fundamental headwinds, a short-term technical bounce back towards the $317 range is certainly plausible if the immediate selling pressure shows signs of abating or if any positive analyst upgrades or minor market improvements occur, providing a brief reprieve. We assign this particular short-term rebound scenario an approximate 50% likelihood, acknowledging that extreme market volatility often leads to rapid oversold bounces as short positions are quickly covered, creating temporary upward pressure. However, for a more significant and truly sustained rebound to materialize, it would undoubtedly require stronger and more convincing fundamental catalysts, such as clearer and more reassuring communication from management or unexpected positive news impacting the broader EV market conditions, shifting the narrative. Conversely, a continued descent and a definitive break below the critical $300 psychological mark, especially if accompanied by persistent and heavy selling volume, carries a demonstrably higher probability in the immediate near term, signaling deep trouble. This more pessimistic scenario would likely see Tesla quickly testing the $280 support level, and we estimate this severe outcome to have a significant 75% likelihood if sales continue to profoundly disappoint and there are no new positive developments to counterbalance the overwhelming negative sentiment. The overarching bearish case is further reinforced by TSLA's persistently high valuation multiples relative to its now declining earnings, a point consistently highlighted by venerable value investors like Warren Buffett, who famously avoids such speculative and seemingly overpriced plays that lack fundamental stability. Looking towards the long-term horizon, The robust bullish prediction for Tesla is heavily contingent upon the successful execution and market acceptance of its next generation of vehicles, most notably the cheaper Model Y, which is eagerly anticipated to enter production very soon. If Tesla can truly meet its ambitious target of delivering over 1 million units in the second half of this year by rapidly ramping up cheaper model production, and if substantial, tangible progress on its pioneering robotaxi technology is demonstrated to the market, this could undeniably provide a powerful catalyst for a strong and lasting rebound, reigniting growth investor interest. However, it's vital for all investors to recognize that these truly transformative catalysts are currently more distant and inherently speculative, requiring substantial operational execution and favorable market conditions to materialize fully, making them a higher risk. What should you, as an astute investor or trader, vigilantly look for in the coming weeks and months to make informed decisions? Closely monitor upcoming Q3 delivery numbers, which will serve as the next major fundamental data point to either confirm or powerfully refute the current sales slump narrative, providing concrete evidence of demand. Any official announcements or concrete progress updates regarding the cheaper Model Y rollout will also be absolutely crucial indicators for a potential turnaround, as successfully addressing the core demand issue with a more accessible model is paramount for revenue growth. Furthermore, maintain a keen eye on Elon Musk's often unpredictable public statements, particularly on platforms like X, and observe any shifts in his political or business engagements, as his personal influence on TSLA stock price remains undeniably significant and can trigger rapid shifts in sentiment. Always internalize that high trading volume observed during downtrends almost invariably signifies strong institutional selling pressure and lack of conviction. So continue to monitor volume closely on any potential reversal attempts, as it provides invaluable insight into the true conviction behind the price action and who is buying or selling. Technical indicators like RSI or MACD on the daily chart can also provide additional confirmation for overbought or oversold conditions during potential reversals, aiding your decision-making process. That definitively concludes our in-depth analysis of Tesla for today on Explain the Charts. In these inherently volatile and uncertain markets, we wholeheartedly encourage all our viewers to always conduct your own thorough due diligence, meticulously research every investment aspect, and manage your financial risks with the utmost prudence and discipline.